Hello and welcome to this Thursday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us an update for the brokers. Kevin Hill is there, and he's going to give us a shipper econ update with myself. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
The edition of this carrier update presented by PowerFleet. I'm Zach Strickland, and we continue to watch those volumes rise. The outbound tender volume index pushing over 12,000 yesterday continues to go up another percentage or so, yesterday. So when will the volume start to crest? That's the big question on everybody's mind. I think this is one of those situations where we're just going to have to monitor it day by day just to see when we finally run out of inventory or that consumption demand starts to dry up just a little bit. Of course, a lot of this is driven by panic buying, a lot of shippers repositioning freight. Not all commodities are impacted by this recent increase in tender volume. So when will we start to see something kind of give us a sign that things are kind of turning down? Well, we're starting to see that a little bit right now, not in aggregate, but in a few of these markets. So some of the largest markets in the United States, if you look at Atlanta, Harrisburg, Ontario, Dallas, Allentown, Pennsylvania, these are our top 5 markets in the United States right now. You look at their outbound tender volume volatility, everything in green is showing a moderate to strong increase in overall volumes. If you look right here, Allentown is actually starting to stumble a little bit. And then Ontario as well starting to stumble. Ontario, of course, is out here in Southern California, this big dark blue region right here. This is one of those key markets to watch as we're watching this situation unfold, because that's a lot of where the Chinese imports come into, and they sit in these DCs and warehouses in Ontario. So this is kind of an early signal. This is the early signal we were kind of watching for to see if maybe some of these longer haul volumes start to fall off a little bit, as they don't go into these megalopolises and metropolitan areas. But for now, Atlanta, Georgia still continues to show a significant increase in volume as well as tender rejection rates. So an 11.32% tender rejection rate. This is one of the highest values we've seen in the last year, save for the Christmas season. But 6.02% increase. So last time, we were around 5%. So pretty significant increase in Atlanta in terms of tender rejection. Capacity is much tighter there. Of course, there's lots of DCs around South Atlanta right there, and also the reefer volumes are stronger in Atlanta for the Southeast as well. So Dallas as well, really picking up on the volumes this week, as well as tender rejection rates, 7.39% higher. Dallas has been one of the more stable markets of the United States over the last year and a half or so, since 2018. Seasonally speaking, we start to see this market really heat up as temperatures warm up in the summer. We are way ahead of schedule right now. This is the all-time high for tender volume values for the Dallas market right now, and that includes Christmas. We actually surpassed Christmas in Dallas. So let's look at these bigger markets in terms of volumes in general. So you can see I've got Dallas, Atlanta, Harrisburg, and Joliet. These are the bigger markets in the United States representing certain segments of the country. Joliet is not quite one of the top 5 markets right now, but it has been historically one of the largest ones, sitting there around Chicago. Again, we want to watch these little hub markets to see which areas of the country are going to see a little bit more increase in volume, therefore have a little bit more increase in volatility. As this relates to rating and capacity, if volume increases too rapidly, the market will not be able to absorb it. So all of these other markets, and if you look at, there's one on here that that's gone kind of horizontal, and that is the Ontario market that you saw on the map. All these other bigger markets right now are going through an increasing amount of volume. So middle sections of the country still showing some robustness. I know we talked about Allentown right there around Philadelphia, Harrisburg markets. That's starting to slow down a little bit, but Harrisburg's still on the rise. Everywhere else still on the rise right now, except for Southern California. So looking a little bit further into the supply chain, we've got custom shipments coming into the port of Los Angeles, Long Beach. That has started to recover a little bit here in the last week, but now it's started to settle back down. We're not looking at a full-size recovery for imports into Los Angeles right now, and also outbound tender volumes slowing down as well out of the Los Angeles market. So we may be on the verge of running out of the early warning signs of running out of a little bit of inventory in the country as China struggles to get back online. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everyone. I'm Luke Falasca bringing you another broker update. And wow, the volatility is crazy in the market, but that is a great opportunity to have a fantastic month and end of quarter. So let's go ahead and take a look at the chart in front of us. We're looking at the outbound tender volume in the United States. Excuse me, nothing new here. Continuing, that blue line is continuing to push to all-time highs as we approach close to 25% volume growth. Now, the orange line here is reefer volume levels. We're seeing those are sitting at just under 2,000 on the index scale. That's a really high push. We're looking at this on a one-year scale. You'll notice reefer volumes have never hit this high before in the last year. That's a really good sign that reefer season, produce season, it's beginning to hit. So keep an eye on that. We saw a massive surge overnight in reefer volume. So keep an eye there on that, especially as these grocery stores need to continue to get restocked from everybody grabbing supplies out of the stores. Next chart here is van tender rejections and reefer tender rejections in the United States. Just looking over the last couple months, van tender rejections, you can see they're sitting at just under 15%. We're right about at the peak where we were during the New Year's holiday spike. So we're already right back where we are, and it doesn't look like we're slowing down. You need to be increasing your spot market rates for drive-in freight. You will get burned by carriers if you don't, because they will ask for a premium right now. So make sure you cover yourselves on those rates. If you have contracted freight, only take the bare minimum that you have to take. Don't take any more unless you can increase your rates with your shippers. That being said, also a great time to land a new customer. Start calling around. We'll look at the call map in a second. Reefer rejections are sitting at about 20%. Not quite to that holiday New Year's spike that we saw, but we're getting close. And if it continues, you notice, I mean, look at this trend. We went from about 12% to 20% almost overnight. That's a massive surge. You want to keep an eye on that. We will start covering reefer much more heavily the rest of this week and next week. Now, this next chart here, we're going to be diving into the Harrisburg market. Harrisburg, Pennsylvania has seen a huge surge, as has that whole part of the country. You know, nearly 1/3 of the population of the country lives within about a 300-mile radius of that area. So you see this blue line here? That is drive-in volume levels out of Harrisburg, Pennsylvania. Massive surge. We're sitting at about almost a 33-35% increase since the beginning of March. Now, this green line here, that's 2018 volume levels. Purple line, 2019 volume levels. We're way above, not even close. This is the highest volume we've ever seen out of Harrisburg, which is now the second largest market in the United States by volume levels, second only to Atlanta. So, as you see this volume level continue to spike, shippers need help. Be sure you call. That's a great opportunity to land a new customer. If you don't have a customer in Harrisburg, they're going to need help. But also, it's going to suck out all the supply of trucks as well. So be mindful. Now, this next chart is the Harrisburg rejections. So look at this here. Massive surge in tender rejections all the way up to 22.25%. We've beat the New Year's holiday peak, which topped out at about 19.5%, so we're already above that. You need to continue to increase your spot market rates out of Harrisburg. We're continuing to increase. It's not slowing down. If you don't increase your spot market rates out of Harrisburg, you will get destroyed, as carriers will ask for a premium. This is also a good opportunity to be the hero to your shippers in those markets. They're going to need help covering freight. They need all the help they can get. So be sure to call around in Harrisburg to move as much freight as possible, and you're going to have to hustle. A lot of things happening. I'm Luke. That'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
And welcome to your Shipper Econ Update. I'm here with Kevin Hill, and we're going to go over some of the latest economic trends and what they mean for shippers. Kevin, Pleasure to have you here.
Pleasure to be here.
One of the first things that we're just going to jump right into it is weekly jobless claims, right? This is one of the first measurements that came out that shows an actual impact for the coronavirus. The latest trend that we see with weekly jobless claims is that there was a significant spike of about 70,000 to 281,000 jobless claims. As we see here, it has a direct correlation for retail sales. We're going to jump into retail sales a little bit later, but the big thing, we're starting to see layoffs happening in the economy.
We're seeing a real trend toward layoffs. I think nationwide, that's about a 30% jump week over week.
Right.
So the effects of coronavirus and the shutdowns are taking effect. If you look at the Northeast, it's even more significant. It's multiples on top of that. I think New Jersey was about 12 times more jobless claims. Connecticut was 8 just over the weekend, and it's jumped since then. So where you have shut-ins in place, you're going to see more significant jobless claims come in. But it's a trend that we'll probably see over the coming weeks.
Right. Like you just said it, we're going to see this in the coming weeks. It's likely going to amplify more and more.
Yeah, this is just the first week of the real effects.
Exactly, and we see it's a significant blip up, but it's not even that much of a spike compared to 2008, 2009. So it's significant, but we still have quite a ways to go before we get to some of those historical levels that were at its absolute worst. And of course, it's going to be a little bit different from industry to industry of those that are really affected by this, right?
It is. It's going to be different by industry, but it's still going to take its toll on industries across. Once certainly like essential consumer packaged goods, once the run on that has ended, I think you'll see jobless claims come in on that. But I'm hard pressed to see any industry that is really immune to what's going on right now.
Awesome. And up next here we have retail sales year-over-year change. We have retail sales here in purple. This is the February data. It did have a decline, the most significant decline I think since, in over a year, or just about a year. And what we're seeing is that there was some waning consumer spending early on in the year. There might be some subtle upticks coming from some of the panic buying, the grocery stores, things like that. But some of the other areas that might really be impacted are those stores that have shuttered down a lot of the traditional brick and mortar stores, right? Yeah,
definitely in those stores, we're going to see retail sales maybe hit a brick wall, especially non-discretionary. I was looking to this morning before I came on, and February home sales were pretty robust in February, but I think those are going to take a severe drop. Basically self-quarantine and quarantine and shut-ins is going to grind down the halt on those transactions. Not quite retail sales, but it's kind of an indicator of people going out and spending and shopping on discretionary goods and things that you can put off till next month or after this has passed.
And definitely shippers exposed to these segments definitely going to be impacted here.
They definitely will. They definitely will. You saw a lot of malls have shut down or are talking about shutting down. Commercial real estate companies who operate these open air shopping malls are shutting down. You're seeing high-end retailers, non-discretionary kind of retailers are shutting down for 2 weeks. And it's going to take a massive hit on their numbers.
Definitely. And one of the things that's really going to take a massive hit, probably the last talking point here, GDP, right?
Yes, it is. The latest forecast. And GDP, as you know, as an economist, are usually pretty optimistic. Right. So basically, JP Morgan came out, went from -4% GDP for the second quarter last week was their forecast. I think they came out with a new one, -14%. Right. Which, if that's a rosy projection of the economy, I don't really want to see that. Mnuchin, who's the Treasury Secretary, came out yesterday and threw out a 20% unemployment number. So if you're a shipper out there, there's a lot of uncertainty right now, and it's very difficult navigating these waters.
Difficult indeed, a lot of uncertainty. Kevin Hill, thank you so much. And thank you so much for tuning in. That's going to do for this Thursday edition of FreightWaves Now. But the content doesn't stop here. We're always streaming around the clock, especially during these uncertain times. So check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.